Hey,
Hello,
hey.
hello.
How are we all doing?
Hello, Mr. Dave. I am fine. How are you?
I'm good. I'm good, mate. I'm just getting the background music on. There we go. And let me share my screen. Get that going. Yeah. How are things, mate?
I'm muted. I'm good, thanks. It's been a busy but fun day. Not much happening in the market, but yeah, I took a few trades, which is always nice.
Yeah.
Yeah, how about yourself?
Yes. Not so bad, mate. Not so bad at all. Yeah. Just been eagerly awaiting for this event to come and pass. And I don't
Yeah.
think we're going to get any sort of surprise at all, are we? Because I mean, it'd be great to watch on stream. It'd be fantastic. It would probably be the best FOMC meeting we've had in a long time. If they come in with anything but a no change, I mean, look at that.
It's the
Basically
commentary, isn't it?
100%. Yeah, 99.6 now. That's obviously only just been creeping up more and more.
Yeah.
We've got Snarkman from Australia. Hello to you from the other side of the globe. We've got Stu. How are we doing, mate? We've got Brandon from Frozen, Tennessee. Hello, Brandon. How are we? We've got Barros. We've got Steve-O. And we've got Lee. Anyone else that's in, do get your comments in. Let me know who we've got in. We should have quite a few people joining because all the tweets are scheduled to go out between now and the next couple of minutes across the three accounts. So, we should be hitting a wide audience there. And yeah, we have got 10 minutes. So obviously it's not long to go at all until we get the interest rate announcement. And then, of course, we've got half an hour to go until Powell gives his speech. And then obviously we move on to the Q&A. And then that's it, done and dusted until, as you can see, March the 18th. So we've got another big gap between now and the next one, probably about 6-7 weeks, something like that. So yeah, there's none in February. February is one of the months that they take off again, and then we'll be moving into March. So big gap. And I was actually looking at this the other day on stream. Would have been Monday on stream, and I was thinking like going into. I haven't took it yet, which might be a mistake. I don't know because it obviously all depends on what he says.
What's
But
this in
going
March?
into it, yeah, this is the March one. A little punt there. Obviously, you wouldn't be putting anything serious money on it, but down at 15%. Anything can happen between now and March, can't it? And I was thinking, is it maybe worth a punt? For instance, obviously not financial advice. Don't go and do this based on obviously this, but $100 returns 66, so it's just over a 6x. I don't know. Obviously,
what have they got? What have they got, Dave, on Polymarket on the mentions? If we make it interesting,
yes.
Is there anything that I could have a nibble on?
What's he say?
Count up.
What will Powell say? There we go.
Yes.
What will Powell say during January press conference? So inflation 40 times, 83%. How does he say that? Yeah, well, I suppose this counts obviously until the very end, doesn't it? Like we normally turn it off after, about half an hour of the Q&A because the questions get a bit boring.
There's any bandits?
Do you know what's a shame not on here is well anchored. He loves saying well anchored.
He does like well anchored.
He loves saying well anchored. Not our job, 24%. Too late, 21%. Look at the volume on them, 3K. 3K volume on Too Late. Good afternoon, 98%. He always says that. Always. He always opens with good afternoon, doesn't he? But I suppose the one time, if you bet on that enough times, I don't know if it would ever come in or not because he always opens with good afternoon. But stock market's not so bad. I mean, that's 34%.
No, I've taken a couple of positions.
He'll never say that. He never says Trump. He always says administration or just politics, doesn't he? Unless someone asked him a question where we said maybe President Trump. I don't know, but tariff 13 times, 49%. Job 15 times, 69%. Let's see who else we've got in. We've got. I don't know how to say your name, Rubble. I'm not gonna try and butcher it anyway. But hello from India. Welcome to the stream. We've got James in. How are we? Got Dip to the Moon, ready for movements, and we got James saying two legends, one cup. I bet you'd love to see that, wouldn't you, James? You would absolutely love to see that. As I'm sure most people would, really.
Ooh,
But yeah,
I
going
quite like
into
the
it,
look of this.
yeah, going into it, we had that decent pump, didn't we? I mean, we had it again, actually, the past hour, but we had this decent move up, you know, this morning into this afternoon, all the way back above 90k towards 91k, 90.5k, and then we did get this nice little push up again. You know, that's 15 minutes bang, and if you notice, obviously, all we did on that was just a liquidity sweep, weren't it, of the one previous. That was literally just up, bang, clear that, stops taken, thank you very much, and then back down. So yeah, a bit of liquidity hunting, obviously, on a day like this is nothing unusual. But if we look at, obviously, just, you know, generally Bitcoin's wider stance, we literally have nothing, do we? Like, it's just in waiting.
No man's land.
This is some analysis from the newsletter today, but we're just waiting for a break above here or a break below here, and then, you know, on we go then to the next levels. This thing is ridiculous. Feeling bad FOMO from that.
I was long.
I bet you was.
I had an order marked out, and I'd had the order in for a while. It was from a zone that I had marked out from May last year that I'd just been patiently waiting for, and it's because the other one that got a bid that I obviously I'm still a little bit underwater from my airdrop is lighter. I don't know if you caught that as well. That had a
there we go. Yeah, so this had a good push up. Ignore that. That was pre-launch price action. Yes, past 2 days has actually has pushed up a nice little bit, hasn't it? But I mean, yeah, hype is a ridiculous push up. And then of course we got these two now. What do you think on these? I mean, silver's looking wild, in it.
Yeah, silver's looking. Unless you're scalping, silver looks fairly untradeable.
I mean, that candle was crazy. That's the biggest commodity candle ever, I read.
Yeah. By volume, that was huge. For me, I've got more interest in. For me, like I've ridden silver. I've done very, very well on silver, but there's better risk reward elsewhere now. Unless you're scalping this, for me, the ones that are on my list, I would say platinum and palladium, but they're running quite hard as well. Is copper. Now, I did cover my bull case for copper. It won't be as explosive as this, just by the way it moves, in the fact that they serve different purposes. But I think copper is a very, not financial advice, but I think copper would probably be quite a good hold over the next 3 or 4 years at least. Yeah, definitely one. I've taken a couple of poly markets, Dave. I've done him to say only small ones. I've done him to say assumption.
Yeah.
Probability. Yeah, assumption and probability. I was debating whether I do Trump, but he never says Trump, and I don't know if Trump classes as the president. Stock market at 32% is an interesting one, because given that it hit an all-time high, the spread on that's a bit massive, so I'm going to limit bid.
I think the stock market one looks interesting. Gold is really shooting for it now. I'm quite interested in this curve, really, because it's riding this curve nicely, and obviously at some point, typically when you get a curve like this, it reaches a climax and then you get dropped down. But yeah, I mean, you're just kind of shooting in the wind, aren't you? Like, just kind of hoping more than anything that you're able to catch the top, or at least a short-term top on it. But I mean, what a ridiculous move this carries on having. And obviously up here, about another 10%, and then it reaches $40 trillion for the first time. It will be insane. We've got big ads. Any of you guys opened some new long-term positions during these last few weeks?
Copper. Copper. I have a lot of copper now. That's probably. There's stuff that I like. Like there's stuff that I'll keep buying. But yeah, it's
I think
difficult to find value. Mostly from a stock portfolio perspective, I'm very interested in energy plays. I'm very interested in emerging markets, and I'm very interested in sort of low cap miners because I think there'll be a lot of M&A. There is a particular index that I have been buying quite a lot of. That do I reveal it, Dave, or do we save it for a video? Do we give it to the people on the stream? Yeah,
give it to him. Go on, give it to him. Give him the juice.
The Brazilian index. Get it up on. Get it.
I think I've tried to pull this up once before, and TradingView wants me to do something mad. I think. Go on. What is it?
Type in Brazil and see if it's Brazil 50 index futures. iShares Brazil ETF. iShares Brazil. Yeah, iShares Brazil ETF.
All right.
We'll do that ETF.
Oh, bless me.
Showing the cool off on the 5. But this thing is.
Whoa! Look at this.
This thing is about to go absolutely
Tell you what,
bananas. Pardon the pun. This thing is gonna go nuts, in my opinion. Like this thing is breaking out big time.
Yeah, look at that. So it broke that. We've got 1 minute to go.
Yeah,
we've got 1 minute to go, but obviously, yeah, I mean, it broke that descending trend line there.
Get your sandal shoes on.
And then, obviously, if we look at that there, you know, perfect retest from the upside there on that descending trend line that it broke. Yeah, I mean, yeah, that looks fantastic, doesn't it? What have we got left? Hang on, we'll come back to this Brazilian.
On it now. It should be on it now. Let's have a look. Forex Factory.
It's got 20 seconds to go.
Get 20 it up. Can you put gold side by side?
Yeah, hang on. Oh yeah. Hang on. This one, get gold on. There we go. Let's turn. I'll turn Stonksy off so we can see it clearly. For the price action. Yeah. We're on the 5 on that one.
If you click at the top there where it says 5, it'll put both on.
There we go. Right, and there we go. Right. Let's have a look. I'll get that if you want to check it. I'll leave my. I was going to go on Twitter and check it then. I think we'd see a much bigger candles than this if it wasn't no change. Obviously, no change was basically 100% odds on to be the case, and judging by the candles, it's been exactly that. Otherwise, I'm sure we'd get some massive volatility coming in. We've got
unchanged 3.75 unchanged.
Yeah. There we go. So in terms of obviously the actual event and the outcome, nothing burger, because it was perfectly priced in. We've got Dip to the Moon saying, what will Powell say? Trump, yes. Quantitative easing, stagflation. So is that what you've punted on? Is it Dip to the Moon? I put a little on each long of what will Powell say, just making listen to his speech a little bit more tolerable. I don't know why well anchored. We need to get a video going for well anchored to be an option on there. He loves saying well anchored.
I can hear you saying that when you've had a few too many beers.
Yeah,
I'm a bit well anchored.
Yeah, apart from there's no break in the words. And there's 1 or 2 L's removed as well. So, but yeah, there we have it. You know, as expected, Dave's well anchored, mate. Yeah, yeah. So that's that. But obviously, don't go anywhere because we do have the press conference to watch and the Q&A. So we will be watching that live on stream. So don't go anywhere. We've got a nice half an hour now, where we can eagerly await to see Powell's big, beautiful face.
Yeah. We've got a massive night as well because it's tech earnings tonight. There's some big hitters reporting. We've got Meta, Microsoft, and Tesla. I think it is tonight.
Ooh.
I'm short on 2 of those.
Let's go have a look at them beauties. Let's see. Not memes, stocks. So we've got Meta. So let's have a look at them. So the revenue estimate is 58.46 billion. Jesus. Who else is it? We've got Microsoft.
Microsoft.
80 billion. 80 billion. Christ. And who else was the other one?
And Tesla, I believe.
Oh yes, Tesla Day. 24.74.
Tesla will be what he says about robots.
Yeah, that is crazy, isn't it? The revenue difference between Tesla and Microsoft. So then when do we have Google? So we've got Google.
Google's next week.
4th. Yeah, so a week today. Amazon. A week tomorrow. Yeah. And then Apple is tomorrow. Yeah, and then of course the last one as usual, Nvidia right at the end of February, Wednesday the 25th of February.
Nvidia's on a different cycle.
Yeah, it's always the last one, Nvidia, isn't it? Always. But yeah, there we have it in terms of some more volatility coming tonight. So there's, you know, if you didn't know about that, there's your little bit of alpha from Wiz as well there. If you did not know that we had tech earnings tonight, there you go.
Yeah. Well, if you read the newsletter, you'll have seen my thoughts on some of the trade setups.
I think we should watch Wiz trade, the 1 second chart.
The 2 tick chart.
Yeah.
You imagine.
Go on, Bitcoin says BPN. BPN, how are we doing? BPN, what are you thinking, mate? Are you bullish? Are you bearish? BPN is a legend of the stream. BPN was calling for a price collapse on Bitcoin when Bitcoin was well above 100k before we obviously got the actual price collapse. So yeah, BPN legend, absolute legend.
I'd like a nice price collapse. Do you know what was so disheartening today, Dave? Is I logged into an exchange account that I've not had for ages, that I've not looked at, right? There was a 50x sizable short on Solana from 147 that had been clipped in on, and I hadn't set a TP, and I was like, it went literally like that out at 117 would have been beautiful. Like, I completely forgot. I must have set the order.
Thing is, though, I mean,
I don't use.
It's still being down at 125, 126 is not bad.
So I've set some TPs now. I've set some TP. For me, I've just put my entry, put my stop loss at break even. And if it clips down, it clips down. Yeah, it's so annoying.
That's insane. What a nice surprise that is.
Well, it isn't, because I look at it and I'm like, if I had set 117,
yeah,
like I was looking at.
Also, you still got a decent amount of unrealized P&L there.
Yeah, and I'm short from a position of power.
I mean, on 50x, that must be at least about 1,000% P&L.
Yeah, it's about 700 odd percent.
Yeah. So BPN's looking for 78k.
Ooh.
So BPN's looking for a sweep of that wick as well. Obviously, the wick that hasn't been swept yet from November, the liquidation wick. What did we get? We got a no change, mate. We got a no change as expected.
Here we have, Dave, so the top headlines. It was a 10-2 vote to hold. Unemployment rate has shown some signs of stabilization. Fed says governors Waller and Mirren dissent in favor of 25 basis point cut. That's interesting because obviously Waller is one of the front runners for Fed, isn't he? For the Fed chairman.
Is he?
I believe so, yeah. Let me have a look. Fed.
We'll pull it up.
Who will Trump nominate as Fed chair? Yeah, Waller is down at 15%.
Oh, yeah. Yeah. Isn't it funny that once upon a time Hassett was like 80%? Something like that, weren't it? Yeah. 84, 85% at one point. And now he's down at just 6. And then you've got Rick Ryder, whoever that is. I have no idea. I have no idea. And then you've got Kevin Walsh.
Do you know what other surprise I had today? Is I placed a polymarket bet on an account that I'd not used for ages. It was one of my mates back, a bit ago, who was telling me that I should lump on to Seattle Seahawks to win the Super Bowl.
I remember you telling me about this.
I got in at 14 cents and it's up at 69 cents now.
Is it? Let's see. Yes, look at that, 68. So when is this? February the 8th of February.
I don't know if I'll be watching it. I'll be flying to Thailand that night.
You'll be able to get Wi-Fi on the plane, won't you?
Well, I think I fly out at like 2 a.m. I think I start flying just as it starts kicking off. I think because I fly out of Dubai. I fly out of Abu Dhabi. I shouldn't be saying my travel arrangements on air, but I leave Abu Dhabi at like 2 a.m.
I don't think anyone's going to follow you to Abu Dhabi.
I land in Thailand at like 8 a.m. I'm a Rams fan. Honestly, I have no idea about American football. It was just this guy who is a friend of mine, very, very good gambler, who just was like, lump onto Seahawks. So I lumped onto Seahawks. And I've taken my initial out now, so it's a free
you know
bet
what?
at this
You know what's funny with the NFL is it's the NFL is very much like the Champions League, in it, where you get a lot of different winners constantly. Like it seems to be, it's just very cyclical. The NFL, it seems like you always get different teams up there. I mean, I'm no expert on the NFL at all. I don't really keep up with it either. One thing I notice every year is that it seems to be, cycling. Obviously, I believe the Chiefs was in there quite a lot, wasn't he, in recent years? But obviously now they're not there. So it seems like it's cycling through different teams like it does in the Champions League. But yeah, I mean, it should be. I would love to stay up and watch it, but I imagine it's on very late.
Stream it, and then you can call it work. Just sit on Polymarket and sit on stream, and you can call it work.
I tell you what, you get us a sizable Polymarket deal to do it.
I'll ask some friends.
Yeah, and I'll sit here and I'll watch the NFL, and I'll lump it all on Seattle. But yeah, there we go. Delta, evening, gents. Good evening to you, sir. How are you doing, Delta fella? What's good? The Bitcoin's not really doing anything for now. Obviously, the one thing that has been doing something aside from metals is the S&P, which did hit an all-time high in futures today. Did we hit an all-time? Yeah, so we would have hit an all-time high on open as well. Yeah, on Thingo, but yeah, definitely. We got well above 7,000 in futures, and obviously coming into where and a bit of newsletter analysis from today was this area here holding as SR. So we're testing that at the moment. So what am I doing here? So hopefully we're going to hold that, because that would be quite bullish. Flipping this bit of resistance from over here in January, and then obviously a little bit here before we got the push through. Holding this as support would be bullish for then, hopefully pushing on next leg higher towards, in the 7,000s. So that's good to see. And obviously, the longer that the S&P remains in the bull market, the better chance Bitcoin has of pushing back to the upside. But yeah, do let us know in the chat. Are you bullish? Are you bearish? What levels are you looking for? Do make sure as well, if you haven't, drop a big like on the stream.
Yes.
Yeah, don't be slacking on the likes, guys.
Make sure you subscribe to both channels as well.
Yes, and obviously now is the perfect time to say, go and watch both channels. Wiz has just put a video up today, which I'll get up right now. Of course, come and check out the Stonksy ones as well. So I'm putting videos up every Tuesday and Thursday. I put this one up yesterday. So if you haven't watched it, come and watch my latest video that I've put up here. And then, of course, let me get it up. Make sure you are subscribed to the CSE channel as well. As you can see, as easy as that. Just type it in on the search bar, click on it. Actually, I'm not subscribed to this isn't the Stonksy account. This is my own one.
What do you think of the thumbnail, Dave?
Hang on, where is it? Let's see. Videos. Come on, click. Hey! I have no doubt that Trump actually looks like that underneath his suit as well. That's great. What a thumbnail. I like this one. I was looking at this yesterday. I liked the fade in the background. I thought that looked really good. I like that a lot. Yeah.
You've been killing it with the thumbnails.
Great. Well, I've been taking a lot more time and effort into them. Trying to make him look nice and jazzy. So I suppose you spend enough time on something, you can make it look as good as possible. So yeah, been trying to improve them. Well, to be fair, do you know what's funny is the most experience I've had with Photoshop in my life was in, what would it have been now? It would have been probably like through high school, but particularly like year like 9, 10, and 11. So a long time ago. But what's funny is, as I've been obviously delving back into Photoshop more with improving the thumbnails and that, things have been coming back to me from all them years ago of, oh, I remember how to do this now. I remember how to do that. So it's been coming back slowly. But yeah, I'm no expert on it, but you've got to keep pushing on learning, haven't you?
There's a real art to it, I will say. Yeah,
there's
a real art to it.
Yeah, and editing as well. There's a huge art to editing.
You love editing. You love editing, don't you, Dave?
that video of Michael Saylor, I'm not going to tell you how many times I watched that on yesterday morning. God, that seems like a lifetime ago. Yesterday morning, the dancing one. I can't tell you how many times I watched it. I was loving it. It was getting me in a good mood just watching it. But I mean, as for Bitcoin, yeah, we're still just kind of hanging around, aren't we? We're still just kind of hanging around. What I do think is interesting is obviously the structure of altcoins as well. So I think particularly on the majors as well, you like your super large caps, they're all very clean. You can just see exactly where. No, this is Sol. I mean, this is as clean as you want, and it doesn't really get much cleaner than this. You've got this level. Maybe you've got them drawn a bit different, but in essence, you've got 3 major levels when you're looking at something like the daily time frame. So it doesn't really get much cleaner than that. And then on ETH as well, just very, very clean. Just really super clean levels. Obviously, the excitement starts whether we break above or below. For a trading aspect, obviously for a spot aspect, we would rather it break higher. But for a trading aspect, it doesn't really matter, where we break. But I mean, hype center. Did you get a short on it? Did you flip short on it, or did you?
I did not. I did not. For me, it was a good take profit, and I took it in that zone because I thought there'll be resistance. But in some of those, like, I can take profit and think something stops in an area, but I wouldn't want to short because looking at that, if you were trying to put a position in there, right, in that box, you have the liquidity above. You'd basically have to be having a stop loss nearing that 40 mark to really cover that liquidity zone. And at that point, then it just takes for me, I'd rather play this now as a retest rejection. So if you went on to say like the 4-hour Dave, see if that breaks it up a little bit rather than the daily candle. So if you're on the 4-hour, so now that zone you could potentially then have into play if you come up and reject. You've now got a little bit of a basis to come off because that 34 level now you could essentially use that as a rejection zone. If it comes up and it fails to break above there or breaks just above there, you then have rationale to short it. But ultimately, until when you have those big candles like you've seen there, the 4 hours, you're stepping in front of a train to try and short something there. At that point, you probably want to get a retest. And there's a million tickers to trade that you don't need to trade the ones that are the ones that don't give you the setup you need. I
mean, by far the best move of this week. That must be about 8 or 9 green 4-hour candles in a row there, just non-stop up only price action. BNB doing well as well. That has recovered quite nicely. I tell you what, have you checked CZ's comments on X at all? You're on mute, mate. You're on mute.
Since when? Recently?
Yeah.
OKX took a swing at him, didn't they? Cathy Wood took a swing at him, and OKX put a tweet up. Where he was tributing blame. Yeah, OKX took a swipe and said that basically he was at fault for the
10 for the 10
flash crash. Yeah,
that's what a lot of the comments are about as well. A lot of the comments, like, honestly, I read the comments yesterday, because because I seen someone tweet saying like they'd never seen sentiment around CZ and Binance this bad. So I thought, oh, well, I'll go have a look.
Yeah.
And I had a look at the
saying go
comment,
back
and
to
the
Britain,
comments
yeah.
are brutal. It's like literally just non-stop, like scammer, like just like honestly, like it seems like sentiment around him, and obviously favorability is just completely being wiped out. Obviously, I mean you can only take it with a pinch of salt because it is X and it's online, but there seems to be a real kind of sentiment against him now, which obviously he's always kind of been the darling child of crypto, and him, more often than not.
Yeah, Kathy Woods blamed Binance, and then the OKX head took a swipe. I'll send you a link to the tweet in Telegram.
Yeah,
it's quite a big tweet.
Which makes and you know what it makes me think though is what better way to just tell everyone to shut the fuck up than just go and absolutely pump the shit out of something like Asta.
Yeah.
Just like if you're sitting there and you're thinking, oh God, I'm taking some heat here. How do I make it better? Go and send Asta 3x or something, like, just go and just put it on a non-stop, just orbit into space. That's what you would do though, innit? Because then suddenly most people are probably happy again, because most people probably, have bought it at some point. So yeah, I don't know. But yeah, I thought it was interesting because I thought I'll go have a look what this person's going on about. And yeah, it was pretty brutal, the comments. Like I haven't seen hatred towards CZ like that ever.
OKX taking a swing is interesting because I always thought that they were
I'll pull it up now and go.
Yeah. But he went in on he didn't say which exchange, but you know exactly who he's chatting to. It's Star OKX.
Star, yeah. I got his
Star underscore. Okay.
Yeah, we don't want that guy at the top there. we definitely don't want to pull up him. Let's see.
There, that one.
Yeah. People have underestimated the impact of 10th for the 10th. The incident caused real and lasting damage to the industry. An industry-leading company should focus on strengthening core infrastructure, building trust and global users and regulators, and protecting the long-term interests of the majority of crypto users. Setting blah 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 blah. Instead, some choose to pursue short-term gains, repeatedly launching Ponzi-like schemes, amplifying a handful of get-rich-quick narratives, and directly or indirectly manipulating the price of low-quality tokens, drawing millions of users into assets closely tied to them. Jesus Christ. Obviously, we would just like to say this is alleged. We have no proof that Star is actually talking about CZ and Binance, but yeah, obviously, you could maybe suggest he is, because that's exactly where Binance is tagged in the post he's quote tweeted. But yeah, so this has become the shortcut for attracting traffic and user attention. Legitimate criticism is then drowned out, not through facts or accountability, but via aggressive narrative control and coordinated influencer campaigns. But yeah. I mean, exchanges at war. Do you know what? How long has it been since we had a bit of like crypto drama and stuff like that? Like, we haven't really had any crypto drama involving exchanges. I mean,
for a while.
Maybe even going back to obviously FTX Binance. Like when was the last time we had some kind of exchanges at war?
You've had DEXs, because you've obviously had like the Asta versus Hyperliquid and the Hyperliquid Binance, etc., and stuff like that. But I mean, to see two of them, it's crazy, isn't it? Crazy.
Yeah. Good evening to everyone that has joined in as well. Bosco says the boys are on fire. Thumbnail battle. Thank you very much, mate. Appreciate it. Good evening, Jap. Neil, how we doing? Good evening. Don't ignore Clash. Yeah, mate, I think you told me about that one. We pulled that up on stream, didn't we? And had a look at it. I think it was last week, maybe. And James says, we need some exchange to go bust and a CEO to go to prison again. Fun times. Yeah, I mean, the unfortunate thing is times like that, they create good volatility for trading. More often than not, they create bad results for spot gains. But in terms of the trading aspect, they create good trading because, typically when you have something like that, the market goes down. But I mean, it's been a while since we had some drama in it, so maybe
that's what we need.
Drama. Yeah, maybe we're overdue some drama. So, but I do think I look at that and you do just think, don't you, like the one possible way they could just completely drown out the noise is to just go, right, let's just turn the twap on something like Asta and just non-stop send it. Whether he'll actually do that or not, obviously we don't know. What's quite interesting is how vocal he's been on the belief that he thinks 2026 will be a super cycle. That's very interesting because he said it more often. He said it. He obviously tweeted it, and then he said it live on CNBC, didn't he? Last week when he said, pull my balls, spread my cheeks or something about obviously getting.
That was a funny quote.
Yeah. Did you hear the guy as well? That was into him. He just went, "Wow." But yeah, so yeah, I mean, yeah, fun times for sure. Circle's doing well today.
Yeah, I saw that. It's yeah, I don't know the thing for it. I mean, I have very little interest in Circle.
Nice hammer on the daily.
Yeah, for me, I don't get it. Like, I don't get where, because it's such a low moat, because it's not that difficult to build a stable coin, and a lot of their distribution is basically them just passing the yield onto Coinbase, so they don't actually make a huge amount of profit, and they're valued very, very highly for what they are. There's things I'd rather buy. This Tron on the stock market, you just know full well at some point that's going to full send, isn't it?
You would think, yeah, you would hope so.
Robinhood is an interesting one because it's one that someone asked me about earlier.
This one's holding up quite well. That's isn't it? Yeah, I mean, these seem to have. Where's Bitminer?
Below it, BMNR. Yeah, I tell you an interesting treasury company, Dave. Is ticker is PURR, PURR.
Oh, Hyperliquid. Remember HIP-D?
Yeah.
What's that doing now? Oh, look at that.
Have they sold their
Who? HIP-D?
Oh no.
Yeah, I mean, this thing's doing well, isn't it?
Yeah. Well, the interesting thing about these treasury companies, and one of the elements to hype, is if you have 500,000 hype, you can deploy your own perp market on HIP-free, which makes me think that some of these treasury companies, if they accumulate 500k hype, could, in theory, launch a capital market on chain.
Yeah.
Now, you obviously have to provide some of the liquidity and some of the order books, which is the hurdle to get past. But say, like, if obviously it's unregulated and all of that stuff, but say, like, if you wanted to launch, I don't know, like a commodities market on chain, for instance, the barrier to entry is simply 500k ETH. So you could essentially raise money through a vehicle of a treasury company, launch it on there, brand it as a market that you're running some sort of market on HIP-free, and you've then essentially got a listing for a stock exchange.
Yeah, and for TradFi companies, 500,000. Obviously, these companies aren't buying hype from scratch as well. They've already got some, but for anyone that wanted to buy it from scratch, well, at the moment, 15 million. Obviously, you've got to account for the price increase of deploying 15 million into the market as well. So, call it 20. Yeah. But for most TradFi companies, like they've got cash, haven't they? Yeah.
That's like one desk P&L.
Literally got cash. So it's interesting, isn't it, for sure. Have you seen Robinhood's launching 24/7 trading?
Yeah. Speaking about that, I was looking at the chart I don't know whether I prefer a little bit lower on it, but I think the entry on it is interesting because it's on support.
Yeah, I know what you mean. I would, if I was looking at it just bang naked eye, I would prefer probably in and
That's
around
my
there.
zone exactly.
Kind of like towards like mid 90s. If you can get close to 95, but basically just anything below 100, pretty much.
Yeah,
Looks. I mean, that's just right in that SR point in it. There, you had resistance along here, and then it flipped to support, and then there's your SR flip there, test, and then another test there, and then bang up.
Yeah.
So. Yeah, that looks, and this is another one, isn't it? This looks very similar to the Nvidia chart, where it's actually been in consolidation since July. Yes, it's had a blast up and then a blast back down.
Yeah,
but, that's
we're about to have the speech.
Oh yeah. Let me get that ready. What I will do is let me pull this off. Hang on, and I will set up my screen.
Okay. So there's some stuff in the statement. So we have. Economic activity is expanding at a solid pace compared to the wording of a moderate pace in December. Unemployment has shown some signs of stabilization, and they're saying that inflation remains somewhat elevated, but have removed a reference to it moving up.
I'm just splitting my screen so we can watch Bitcoin and watch the speech at the same time, which I'm sure obviously everyone will want. So let's get that going. Pull that across.
Are you drinking baby food? It's a protein shake. I couldn't be bothered. I didn't have time before we came on to make a cappuccino, so I made a protein shake and poured in some concentrated coffee.
Right,
let me be prepared. Yeah, it's been a busy day. I got a video out. It's been a busy day. But yeah, it was a protein shake, so I'm feeling.
You ready? You ready to relax, mate? Now.
Yeah, I'm getting I've got mention market bets, haven't I? So I'll relax when he says.
Well, this is the easy part of should have been prepared. Head Street, I was prepared. The stream hasn't even started. What do you mean? The press conference hasn't even started. How prepared do you want me to be? Oh, actually, I don't think he was talking about me. I think he was talking about you.
Yeah.
Head Street legend. Head Street, I see you're on X. Make sure you hop over to both channels, mate. Hop over to Crypto Saving Expert and Stonksy. And go and subscribe to both, mate. It'd be great to welcome you over. I don't know what X you're on. Actually, I think on the I think it only went out on CSEs on the X, so you're on that. Make sure you subscribe to the channels, mate. It'd be great to welcome you over there. Evening, Rich B as well. Evening, chaps. He says, when does FOMC start? So we've already had the rate announcement. It was no change as expected, but we are basically just expecting Powell any second now to start speaking. In the meantime, let me turn the background music off. So obviously we've got a clear. Oh, here we go.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy expanded at a solid pace last year and is coming into 2026 on a firm footing. While job gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, we see the current stance of monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. A temporary shutdown of the federal government likely weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter. In the labor market, indicators suggest that conditions may be stabilizing after a period of gradual softening. The unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment, private payrolls rose at an average pace of 29,000 per month. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including openings, layoffs, hiring, and nominal wage growth, show little change in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index indicate that total PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 0.75 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
Hi, Chris Rugaber at Associated Press. Thank you. I wanted to ask that, you attended the Supreme Court hearing last week on the Lisa Cook case, and Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with, I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend. In addition, Paul Volcker went to a Supreme Court case famously in, I guess, 1985 or so. So it's precedented, and I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on the job market. You mentioned last month that the household survey might be distorted, and you also mentioned the potential for overcounting jobs, which would suggest that we're still in a negative hiring pace. So do you see the drop in the unemployment rate as solid? And what's the basis for saying that things have stabilized? Thank you.
So, yeah, really two questions. One is, so we're getting through the distortions in the data from the shutdown. However big they were in November, they're smaller in December. So we're getting to a place where they're no longer material. They're still there, but it's a tweak here and there. The reason why we changed the statement, let me pull it out, was simply it used to say that judges that downside risks to employment rose in recent months. So we saw data coming in which suggests some signs of stabilization. I wouldn't go too far with that, but some signs of stabilization. There are also some signs of continued cooling. And so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has clearly improved since the last meeting. And that should matter for labor demand and for employment over time. So for those two reasons, we thought we would take that language out of the statement.
Nick Timrose, The Wall Street Journal. Chair Powell, you've generally avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
So today I'm simply going to refer you to the statement that I made on January 11. I'm not going to expand on it or repeat it. So I'm just not going to. This is really about the press conference and the economy and what we did today, and some ancillary areas, but I'm not going to be getting into that.
Can you say whether the Fed has responded to the subpoenas?
I have nothing for you on that today.
Mike.
Michael McKee from Bloomberg Radio TV. Have you made a decision on whether you would remain as a governor of the Federal Reserve? And if so, would you tell us what it is? And if not, when might we anticipate a decision?
No. And I really, once again, have nothing for you on that today. That either.
Why would you want to leave it all under the circumstances?
Again, I don't want to get into this. Not something I'm. There's a time and place for these questions, but not something I'm going to be getting into today. Thank you.
Thank you. Claire Jones, Financial Times. Thanks a lot for taking my questions. And another one that might, lead to a similar answer. We've seen quite big movements in the dollar over recent days. What do you think is driving the US currency lower? And have you been at all concerned just by the extent of the volatility we've seen this week? Thank you.
So, Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency, and exchange rates and all that. We don't comment on that. It's not our role. So I have nothing for you.
But what's your view on the market movements? What do you think behind them? Is it asset managers diversifying? Is it? Yeah,
I just don't. We don't talk about the dollar. We don't talk about what moves it around. It's just not appropriate for us to do so. Really, the Treasury Department has that. It's their role, their bailiwick, and we stay off it.
Boring, Powell.
Things, but we don't comment on the dollar.
Come on, cause some drama.
They're just wasting questions.
Yeah. That lady then didn't even seem like really she knew what question to ask.
Statement. Should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Well, First of all, if you look at the incoming data since the last meeting, clear improvement in the outlook for growth. The data have come in, and sentiment, the beige book, everything comes in suggesting that this year starts off on a solid footing for growth. Inflation performed about as expected, and as I mentioned, some of the labor market data came in suggesting we're evidence of stabilization. So it's overall a stronger forecast, really, if that's your question. I'm not sure I answered your question.
But in terms of timing or pacing of any additional easing?
So we haven't made, what we'd say about this was that after this meeting, after the 3 recent rate cuts, we're well positioned to address the risks that we face on both sides of our dual mandate, and we'll continue to make our decisions meeting by meeting based on the incoming data and the implications for and the outlook and the balance of risks. Haven't made any decisions about future meetings, but the economy is growing at a solid pace. The unemployment rate has been broadly stable, and inflation remains somewhat elevated. So we'll be looking to our goal variables and letting the data light the way for us.
Steve Leisman, CNBC, and sticking with questions you might answer. Thank you. You had previously, I believe, described the current policy rate being at the higher end of neutral. And if you look at the longer run, the S&P and the longer run rate, 16 of 19 officials are
March's one's now down to 7, 25 basis points. Just look at that. Drop like a stone then.
Towards a middle range of neutral. And what would it take to get there?
So the count I did was that 4 of the 19 were at or above that. I mean, maybe I missed by 1, but I thought it was 4. And if you look at the dealer survey, it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible estimates. This is the higher end of that range, but so for some people they think it's neutral. I think, and many of my colleagues think, it's hard to look at the incoming data and say that policy's significantly restrictive at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. It's in the eye of the beholder, and of course, no one knows with any precision. So, as you had a follow up.
I get what you're saying, but some officials have described the Fed being in a mode of bringing it down eventually over time. Are you still in that mode, or is this a place to hang out?
Yeah, no, I would say if you look at the SEP from December, most people had additional normalization. But at the same time, we've done a lot of the process of normalizing. A good piece of it is done with 75 basis points, and before that, 100. It's 175 basis points we've cut since we began cutting in September of 2024. So you've moved now to, Fed funds is running just a little below 3.65%. So you've moved a good way, and we think we're well positioned here to watch how the economy performs, look at the data. We're not making decisions about future meetings, but we do think we're well positioned after those 3 cuts to let the data speak to us.
Amira. Thank you, Chair Powell. Mara Moakley from Bloomberg News. To what extent did the committee discuss the possibility of cutting at this meeting or in March? And how are you all thinking about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
So there was broad support on the committee for holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want to cut and dissented, but committee pretty broadly for holding today. We're not trying to articulate a test for when to next cut or whether to cut at the next meeting. What we're saying is we're well positioned as we make decisions meeting by meeting, looking at the incoming data, evolving outlook, and all that. And we're in a position where we still have some tension between employment and inflation, but it's less than it was. I think that the upside risks to inflation and the downside risks to inflation have probably both diminished a bit. So, we'll be looking at that. It's about how you weigh the risks to the 2 goals and how big those, and quantify them. And so there are different views on the committee, and, we'll find our way forward as the data evolve.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Has the effects of tariffs already moved through the economy on prices?
A lot of it has. So basically, there are many different estimates, and they're all highly uncertain. But most of the overrun in goods prices is from tariffs. And that's actually good news, because if it weren't from tariffs, it might mean it's from demand, and you know, that's a harder problem to solve. We do think tariffs are likely to move through and be a one-time price increase. So most of the overshoot, if you were to take that out, you'd get, and you would, I mean, inflation, core PCE inflation is running just a bit above 2% x the effects of tariffs on goods. And the other good news is, if you look away from goods and look at services, you do see ongoing disinflation in all the categories of services. So that's a healthy development. So that's what's going on. The expectation is that we will see the effects of tariffs flowing through goods prices, peaking, and then starting to come down, assuming there are no new major tariff increases that are begun. And that's what we expect to see over the course of this year. If we see that, if we see that, that would be something that tells us that we can loosen policy. Also, if we see something that suggests that the labor market is not stabilizing, that in fact the downside risks reemerge, or the data just get worse, we'd have to look at both of those. We have a two-sided mandate.
If I could, if President Trump does pick a new Fed chairman before May, what does that look like? How would you work with that person, and what does that transition period look like?
I don't have anything for you on that. That will depend on Congress's actions and things I can't speculate on.
Howard.
He just notice he refused to say his name then as well.
Given the changes in the statement and all you've said so far, is it fair to describe risks to both sides of the mandate as roughly balanced right now? And is the next move necessarily down?
I'd say that the upside risks to inflation and the downside risks to employment have diminished, but they still exist. So there's still some tension between the mandates. Are they fully in balance? Hard to say. And we think our policy's in a good place. I've just discussed reasons why we might change our policy, and we'll just have to see how the data lead us.
I'm wondering, you a minute ago you said you felt expectations were consistent with your mandate, that the 2 and the 10-year break-evens have moved quite notably in the last couple of weeks, I believe. Is there any concern on that front?
I mean, I recently looked at all of the both survey and market-based short-term inflation expectations have come way down. They were in a good place at the beginning of last year. They spiked around Liberation Day, and now they've fully retraced in the last few months. So that's very comforting. And the longer-term inflation expectations have remained in places that are very consistent with 2% inflation over time. So expectations have been solid, and they reflect confidence in the return to 2% inflation.
Andrew.
Apologies if this is a little bit repetitive, but in the past you've said that the reason you cut rates was that the risk to the labor market was greater than the risk to the inflation side. Is that still true?
We haven't made. You're right. We saw the labor market weakening, and we acted, and I think that was the appropriate thing to do. We will always act to address what we see as the economy moving away from our goals. Risks to both of the variables are a little less. I think that the upside risk to inflation, again, a little bit less, and the downside risk to employment, a little less. I just would say that I'm not making a judgment about how, one of them is more at risk than the other, just that the risks to both of them have diminished.
Okay, thanks. BIS wrote a paper last summer which concluded that global investors were hedging their dollar exposures in ways that previously they hadn't because of policy uncertainty. Do you agree with BIS?
We really don't see much at all about that whole story. There's just not a lot of data that suggests that there's much to that.
Thanks.
Anna Swanson with the New York Times. Can you talk more about what you would need to see in the labor market to conclude it's time to resume easing? Do you need to see further deterioration in the labor market, or would it be enough for inflation to soften?
So we'll always be looking at both things. And so there could be combinations, infinite numbers of combinations that would cause us to want to move. Certainly, a weakening labor market would be an argument for loosening. But what's happening with inflation? If inflation were at the same time getting worse, you just have a very difficult situation there. So we'll be looking at both. Clearly, a weakening labor market calls for cutting. A stronger labor market says that the rates are in a good place. We'll have to be making similar judgments too on inflation, though.
And if inflation does pick back up and the labor market doesn't show further signs of deterioration, is there a chance that you could raise rates rather than simply remaining on hold? What would you need to see to consider hiking?
We don't take things off the table, but it isn't anybody's base case right now. Anybody's base case that the next move will be a rate hike. But ultimately we'll do what we think is the right thing. But that's not where people's expectations are right now.
Yeah, I mean, probably getting towards the latter stages of the questions where they just start to get, obviously, just less interesting. Yeah, I mean, it sounds to me like, obviously, Powell wants to see data so that they can cut. That's what it sounds like to me, anyway. Yeah. I mean, it's not being that's not being priced in. Yeah, that's not being priced in on Polymarket at all. 7%, 7%, but. There's a few times there where he said, basically hinting that, if obviously the data's there, then, they'd be willing to look at cutting is what I got from some of the comments anyway. But I mean, people aren't moving on that at all because 25 basis point decrease for March dropped from 15% to 7% on that Q&A. So even better than a price now.
I might take that.
I mean, to me, it sounded like obviously he wants to see the data there to be able to cut. Is what I got the impression of. I mean, I obviously may be wrong. I don't know, but yeah. I hope everyone enjoyed that. I mean, as for Bitcoin, we've really not moved at all. We got a little tiny walk down during the speech and some of the questions, and then we bounced back. Generally, I mean, I'll just get the 1 hour or the 2 hour, whatever. We're just kind of in and around the same place. So. No movement on Bitcoin really at all for the whole event, and particularly obviously the conference and the Q&A. As for the S&P, it's actually bounced pretty nicely. So right on that zone. I'm pretty interested in that.
Dave's bullish.
Well, this is where you want to see. I mean, if you're looking for S&P higher, this is obviously an SR flip here would be bullish because there's not really much to go to the upside before you're on to in the 7,000s and price discovery. But the S&P looks to have bounced. I mean, let's get the 5-minute chart up so we're not guessing. Yeah, I mean, the S&P's bounced a bit more than Bitcoin has going up there. And let's just have a quick look at what metals have done. Gold went on a bit of a tear, past 25 minutes, half an hour or so. Back to the upside. That's the all-time high there in it for now. So not too far from there. And then silver back, look at that V-shaped recovery there. Jesus Christ.
Ridiculous, isn't it?
Yeah. Little, for anyone obviously, liking the patterns, little inverse head and shoulders maybe they're building for a little push back up towards maybe an all-time high on silver. It's not really that much higher than that. So, hope everyone enjoyed that. This stream. Thank you very much for watching. Now, just a reminder, please do make sure you subscribe to both channels. If you're watching on Stonksy, head over to Crypto Saving Expert. If you're watching on Crypto Saving Expert, head over to Stonksy, subscribe to both. If you're watching on one there and you're not subscribed to any, then please do both as well. And do make sure you go and show Wiz's video from today some love. I'll just pull that up on the screen now. Do go show Wiz's video some love after this stream. Go and take 7 minutes 58 out of your time and go and watch that while you make yourself a cup of tea or something. Hope you all have a great night. I will next be streaming on Friday, but there will also be a video out for me for tomorrow as well, so keep an eye out for that. And Wiz, thanks for joining us. And
thank you very much.
Thank you for spending an hour, just over an hour of your Wednesday evening with us. And yeah, we'll see you all in the Discord as well. If you haven't joined the Discord, link is in the description, or you can find it pinned on the Stonksy X account. Catch us all later. Bye-bye.